quite a lot of developments to be having some implications for the debt markets and of course, the entire market street. The latest, the central bank talking about the standing deposit facility, the SDF, which the cap is now 2 billion naira for all commercial banks. No interest will be paid for 1 penny above that level. That's the review of the November 6, 2014 guidelines as far as the SDF window is concerned. So let's talk to Nnamdi Olisa Eloka, who is fixed income and currency analyst at Zcrest Capital. Nnamdi, good morning. Welcome to the show.
Good morning, Boston. Thank you for having me.
Great to have you here. So the central bank just released this new guideline reviewing the November 6, 2014 on standing deposit facility. What's your take on this? What's your first word on it?
Yeah, so currently market players are digesting the news of the SDF circular released late yesterday by the central bank, and I must tell you that they are taking it with a very strong bullish bite. Currently, yields are down across fixed income securities in the market. In the bond market, we're having the short end of the curve trading firmly below 14%, and the mid to long end of the curve, we're having yields offered at closer to 14% and some at top 14%. The only bond yield being offered above 14%, well above 14%, is a 30-year bond at the moment. In the T-bills market players are very skittish on offers. There are almost no offers across the securities. We have the long end of the curve being offered now close to 11%. And if there is no OMO auction today by the CBN, we might possibly see some trade below 11% on the long end of the curve. So the market is really taking it to a strong bullish bite.
Yeah, okay, so this is all part of the, yes, the central bank want more credit to the real sector from the banks, but at the other end, on the market street, this is also driving down yields across the Naira assets, government securities.
Yeah, exactly. So the CBN is trying to spur lending to the private sector. They are implementing several strategies. So what market players are actually reacting to? It's not just the cut in the SDF volume. Apparently, it was 7.5 billion before, now it's 2 billion. So it's just the forward guidance. What's the indication? What's the CBN signaling? We've been having a lack of OMO issuance in the market so far, and we're really in need of OMO actually. And the OMO is not forthcoming so far. So market players are actually trying to guesstimate the CBN. What are they actually trying to play at? How far would they go with this, their drive to force banks to lend? And how low are they willing to let interest rates go? That's what the current speculation in the market is.
Yes. So, Nnamdi, where do the market traders and dealers see where the central bank is going? There's an MPC coming in the next couple of days. So with the US Fed already signaling a rate cut this month, and all these rapid fire actions from Godwin Emefiele and his team at the central bank, what's your take or outlook on the coming monetary policy meeting?
So at the coming monetary policy meeting, we think the CBN will just still maintain a cautious stance and probably leave the MPR still at 10.50%. Well, that's the consensus opinion in the market. With the CBN tends to be very tricky with guidance of late, so it's very difficult to speculate or exactly say what they are going to do. But what we think is that the major policy instrument CBN is going to drive rates in the market is its OMO issuances, and that's really what market players are focusing on at the moment. And we've not been seeing so much of that, and we're thinking that with all this that's going on and CBN trying to spur lending, then we might be seeing lower OMO issuances. So that's what we are actually looking at.
Okay, that'll be interesting. Anything on currency?
Yeah, so the currencies market has been stable. We're still seeing decent offshore inflows into the market. Yes, you mentioned that the US Fed signaled a rate cut the US Fed chairman, Jerome Powell, his testimony before the US Congress signaled that he will be willing to cut rates because of weakening global economic growth. So we are seeing the offshore investors punting for yields in emerging markets. We are seeing Euro bonds rallying across the sub-Saharan African space, and also local bonds also. We are seeing interest from offshore investors who are looking to hunt for yields while they are still available because of the negative credit environment in Europe and some other jurisdictions. So yeah, definitely we are still seeing offshore assets, offshore investors looking into the market. There is no pressure on the currency because we're seeing decent inflows. So net, yeah, inflows into the market.
Okay, Nnamdi Olisa Eloka, thank you very much for coming through from FMDQ Exchange Place. We appreciate your time.
Thank you very much, Boston.
Nnamdi from...